Ray Dalio just said, "We're entering the most dangerous economic period in 100 years. Not since the 1930s has the world faced this combination of forces. Massive debt, geopolitical conflict, currency debasement, wealth inequality at extremes, and political polarization approaching civil war levels in major nations." The man who predicted the 2008 financial crisis 6 years before it happened. The man who built the largest hedge fund in the world. The man who studied every major empire collapse over the last 500 years and found the pattern that repeats every 75 to 80 years. That man is telling you a storm is coming. And he's not just warning you. He's showing you exactly what he's doing with his own money. 3 specific assets he's buying right now. Not stocks, not bonds. 3 things that preserve wealth when everything else collapses. And if you understand why he's buying these 3 assets, you'll understand exactly what's about to happen to the global economy over the next 3 to 5 years. This isn't speculation. This is the pattern. And the pattern is screaming that we're in the final stage before the reset. Let me start by showing you who Ray Dalio is and why you should listen. Because unlike most billionaires who got lucky or inherited wealth, Dalio built his fortune by understanding cycles. He founded Bridgewater Associates in 1975 from his apartment. Over the next 48 years, he turned it into the largest hedge fund in the world, $160 billion under management. But it's not the size that matters. It's the track record. From 1991 to 2020, Bridgewater returned 12% annually after fees, while the S&P 500 returned 10%. That doesn't sound impressive until you realize Bridgewater did it with half the volatility. Lower risk, higher risk-adjusted returns. That's skill, not luck. But here's what really matters. Dalio predicted the 2008 crisis, not in 2007 when it was obvious. In 2002, 6 years early, he wrote a research paper explaining exactly how the housing bubble would collapse, how subprime mortgages would default, how the contagion would spread to the banking system, how the Federal Reserve would have to print money, how gold would rise, everything. 6 years before it happened, and he positioned Bridgewater accordingly. When the market crashed 57% in 2008, Bridgewater made 14%. Positive returns while everyone else was drowning. That's not luck. That's understanding the machine. And the machine Dalio understands is the debt cycle. He's written extensively about this, published it in his book, Principles for Navigating Big Debt Crisis, giving it away for free online. He wants people to understand because he's seen this pattern destroy nations. And he knows it's about to repeat. Let me show you how the debt cycle works because once you understand it, everything Dalio is saying makes perfect sense. The cycle has 4 phases. The first phase is expansion. This is when debt is low and productivity is growing. After a major crisis, after debts have been destroyed through bankruptcy or inflation, the economy starts fresh. Businesses can borrow cheaply because debt levels are low. They invest in productive assets, factories, technology, infrastructure. This investment creates jobs. Jobs create income. Income allows people to spend and save. The economy grows. This is healthy growth built on productivity, not built on debt. This is what America experienced from 1945 to 1965. After World War II, the debt was high but manageable. The economy grew because productivity grew. Manufacturing expanded. The middle class thrived. Debt to GDP actually fell even as the economy boomed. This is the expansion phase. It lasts 20 to 30 years. Phase 2 is acceleration. This is when debt starts growing faster than income. The economy is still growing, but now growth is being fueled by borrowing instead of productivity. Businesses borrow to expand. Consumers borrow to buy houses and cars. Governments borrow to fund spending without raising taxes. For a while, this works. The borrowed money creates economic activity. GDP grows. Stock markets rise. Real estate appreciates. Everyone feels wealthy. But the debt is accumulating faster than income, faster than productivity. This is what happened from 1980 to 2007. Debt to GDP went from 35% to 100%. Credit card debt exploded. Mortgage debt doubled. Corporate debt tripled. But GDP only grew 5% annually. The math was breaking. But nobody cared because asset prices were rising. Your house went up 5% per year. Your 401k went up 8%. You felt rich even though you were deeper in debt. This is the acceleration phase. It lasts 15 to 25 years. Phase 3 is peak. This is when debt reaches levels where it can no longer be serviced by income. The interest payments alone consume too much of cash flow. Businesses can't grow because all their revenue goes to debt service. Consumers can't spend because mortgage and credit card payments eat their paycheck. Governments can't function because interest on the national debt exceeds what they can collect in taxes. This is the 2008 moment. Subprime borrowers couldn't make their mortgage payments. The loans defaulted. The securities backed by those loans collapsed. The banks holding those securities failed. Credit froze. The economy crashed. This is the peak of the debt cycle. The point where the debt burden becomes too heavy to carry. And this phase leads directly to phase 4, crisis and deleveraging. The debt gets destroyed either through bankruptcy. People and companies default. The debt is written off. Creditors lose money or through inflation. The government prints money, devalues the currency. Debt gets repaid in dollars that are worth less. Either way, the debt burden falls. The system resets and phase 1 can begin again. This is 2008 through 2012. Bankruptcies, bank failures, foreclosures, but also Federal Reserve money printing, quantitative easing, 0% interest rates. The debt was partially destroyed through default and partially devalued through inflation. The crisis reset the system partially. But here's what Dalio is warning about. 2008 was supposed to be a full reset, a complete deleveraging. Debt was supposed to fall from 100% of GDP back to 50 or 60%. The way it did after the Great Depression, the way it did after every previous debt crisis. But that didn't happen. The government intervened. They bailed out the banks. They printed $4 trillion. They kept interest rates at 0 for 7 years. They prevented the natural deleveraging. And instead of debt falling, debt grew. U.S. debt to GDP went from 100% in 2008 to 132% today. They didn't solve the problem. They made it bigger. They delayed the crisis. And now, according to Dalio, the delayed crisis is arriving. Bigger, worse, and unavoidable. Let me show you the 3 forces Dalio says are converging right now. The same 3 forces that destroyed every major empire over the last 500 years. Force 1 is the debt crisis. I just explained this. The U.S. owes $36 trillion. That's 132% of GDP. Annual interest payments are $2 trillion, going to $8 trillion by 2027. This is mathematically unsustainable. There is no way to service this debt at current interest rates without either defaulting or printing money. Both options destroy the currency. Force 2 is geopolitical conflict. The U.S. and China are in a Cold War competing for global dominance, trade wars, technology restrictions, military tension over Taiwan. This is exactly what happened in the 1930s when the U.S. and Japan competed for Pacific dominance. It led to World War II. Dalio sees the same pattern now. When great powers compete, the competition escalates. Sanctions, then military conflict, then World War. We're currently in the sanction phase, moving toward military conflict. Force 3 is internal conflict. Political polarization within nations in the U.S., left versus right, Democrats versus Republicans, wealth inequality at 1920s levels. The top 1% owns 40% of all wealth. The bottom 50% owns 2%. This gap creates social instability, anger, populism, and eventually revolution or civil war. Dalio studied every major empire collapse. Dutch Empire in the 1600s, British Empire in the 1900s. He found the same pattern. Rising debt, external conflict, internal division, and then collapse. The empire fragments, the currency collapses, and a new order emerges. We are in that pattern right now. According to Dalio, we're in the late stage, the final 5 to 10 years before the collapse. Now, let me show you what Dalio is doing about it, because he's not just warning, he's positioning. And he's telling you exactly what he's buying. 3 specific assets that preserve wealth through the storm. Asset number 1 is gold. Physical gold, not gold mining stocks, not gold ETFs, physical gold that you own and control. Dalio has been buying gold since 2019. He wrote a research piece called Why in the World Would You Own Bonds when he explained that bonds are trash. Governments will print money. Bonds will get repaid into valued currency. Real returns will be negative, and the only real store of value is gold. Since then, Bridgewater has allocated 5 to 10% of its portfolio to gold. That's $8 to $6 billion in gold positions. And Dalio personally owns gold. He said in interviews that every investor should have 5 to 10% in gold as insurance, not as a speculation, as insurance against currency collapse. And here's why gold works. Gold has no counterparty risk. When you own a bond, you're dependent on the borrower paying you back. If the borrower defaults or prints money, you lose. When you own a stock, you're dependent on the company performing well. If the company fails, you lose. When you own gold, you're dependent on nothing. Gold is an element. It cannot be created or destroyed. It has value because humans have assigned it value for 5,000 years. And it will have value after currencies collapse because it's the only money that survives every collapse. Dalio knows this. History proves this. Every fiat currency in history has eventually gone to zero. The Roman denarius, the French assignat, the German mark, the Argentine peso all collapsed to worthless. But gold remained. The people who held gold during Weimar Germany preserved their wealth. The people who held marks lost everything. The same in Argentina, Zimbabwe, Venezuela. Every hyperinflation in history, gold holders survived. Currency holders were destroyed. This is not theory. This is 5,000 years of evidence. And Dalio is positioning accordingly. Let me show you what Dalio expects gold to do. Right now, gold is $2,700 per ounce. He thinks it goes to $5,000 to $10,000 over the next 5 to 7 years. Not because gold is going up, because the dollar is going down. When the U.S. government faces the debt crisis, when interest payments exceed tax revenue, they will print money massively. The Federal Reserve will buy trillions in treasury bonds. The money supply will explode. Inflation will hit 20 to 30% annually, and gold will rise to reflect the devaluation of the dollar. If the dollar loses 50% of its purchasing power, gold doesn't double. Gold stays the same. The dollar halves, and it looks like gold doubled. This is what happened from 1970 to 1980. Nixon closed the gold window in 1971. The dollar became purely fiat, not backed by anything. The government printed money to fund Vietnam War and Great Society programs. Inflation hit 13%, and gold went from $35 per ounce to $850, a 24 times increase in 9 years. Not because gold became more valuable, because the dollar became less valuable. Dalio expects the same thing now, except this time the debt is bigger, the printing will be bigger, and gold will go higher. 5,000 to 10,000 per ounce by 2030. That's his base case, not a prediction. A mathematical outcome of currency debasement. Asset number 2 is China and emerging markets. This is going to surprise you because everyone hates China right now. U.S. politicians call it the enemy. The media portrays it as failing. Real estate crisis, youth unemployment, economic slowdown. Everyone says avoid China, and Dalio is buying heavily. Bridgewater has 20% of its portfolio in Chinese stocks and bonds. That's $30 billion in China exposure. And Dalio has defended this positioning despite criticism. Here's why he's doing it. Dalio doesn't invest based on politics or media narratives. He invests based on cycles. And he knows the U.S. is in decline while China is rising. Not because China is better, but because that's how the cycle works. Every dominant empire eventually declines, and a new empire rises to replace it. The Dutch dominated the 1600s, then declined. The British dominated the 1800s, then declined. The Americans dominated the 1900s, now declining. And China is rising, not because of communism or authoritarianism, but because of debt cycles and productivity growth. The U.S. has 132% debt to GDP. China has 77%. The U.S. has negative savings rate. China has 35% savings rate. The U.S. has crumbling infrastructure. China has built high-speed speed rail across the entire country in 15 years. The U.S. has political gridlock. China has centralized decision-making that can mobilize resources quickly. These are facts, not political opinions. And Dalio invests based on facts. Now, does this mean China won't have problems? No. China has massive problems. Real estate bubble, demographic decline, authoritarian government that stifles innovation. Dalio acknowledges all of this. But he also knows that when a reserve currency collapses, capital flows somewhere. When it flows to the next rising power, when the British pound collapsed as reserve currency after World War II, capital flowed to the US dollar. When the US dollar collapses, capital will flow somewhere. The euro is collapsing faster than the dollar. Japan has 260% debt to GDP, worse than anyone. That leaves China. And despite all its problems, China has the manufacturing base, the population, the savings, the gold reserves to potentially become the next reserve currency. Maybe not tomorrow, maybe not this decade, but over the next 20 to 30 years, as the US declines, China rises, and Dalio is positioning for that shift. He's buying Chinese stocks at depressed prices. He's buying Chinese bonds at higher yields than US bonds. He's buying emerging market assets that will benefit from China's rise. This is not a political statement. This is portfolio positioning for the changing world order. And if you understand the cycle, it makes perfect sense. Asset number 3 is inflation-protected assets. This is broader than gold and China. This includes treasury inflation-protected securities, TIPS, real estate, commodities, anything that holds value when currency devalues. Dalio has about 15% of Bridgewater's portfolio in inflation-linked bonds and commodity exposure. Here's why. When the government prints money to solve the debt crisis, inflation spikes. Not the 2% target inflation the Fed talks about. Real inflation 10 to 20% annually. Food prices double. Energy prices triple. Housing costs explode. Your dollars buy half of what they bought 2 years ago. If you're holding cash, you're destroyed. If you're holding regular bonds, you're destroyed. They pay you back and devalue dollars. But if you're holding TIPS, you're protected. TIPS adjust for inflation. If inflation is 15%, your bond pays 15% more. You maintain purchasing power. Real estate works the same way. If inflation is 20%, rents go up 20%. Property values go up 20%. Your real wealth is preserved. Commodities, too. Oil, wheat, copper, they all rise with inflation because they're priced in dollars. When dollars become worthless, you need more dollars to buy the same barrel of oil. Dalio knows this. He studied every inflationary period in history. 1970s US inflation, Weimar Germany, Argentina, Zimbabwe. The pattern is always the same. Financial assets denominated in currency get destroyed. Real assets hold value. Stocks fall in real terms even if they rise nominally. Bonds get crushed. But commodities, real estate, gold, they preserve wealth. This is why Dalio holds inflation-protected assets, not to get rich, to not get poor when the currency collapses. Now, let me show you the timeline Dalio is working with because he's very specific about when this unfolds. He said in interviews that the crisis period is 2023 to 2028. 5 years. We're 2 years in, 3 years left. Here's how it breaks down according to his framework. 2023 to 2024 was the setup phase. Inflation spiked to 9% in 2022. The Fed raised rates to 5%. Markets wobbled but didn't crash. The debt crisis intensified but didn't explode yet. Geopolitical tensions increased but didn't lead to war yet. This was the warning phase, the phase where smart money positions. Dalio went into gold, China, and inflation-protected assets during this window. 2025 to 2026 is the crisis phase. This is when the system breaks. The debt burden becomes impossible to service. The government faces a choice. Default or print. They choose print. The Fed cuts rates back to zero. They launch QE 456. Print 5 to 10 trillion. Inflation comes back not 2%, 15 to 25%. The dollar falls against gold, against other currencies, against commodities. Asset prices become distorted. Stocks might rise nominally but fall in real terms. Bonds collapse. Real estate becomes unaffordable in nominal terms but falls in real terms. The economy enters stagflation. High inflation, low growth, rising unemployment. This is the pain phase. 2027 to 2028 is the reset phase. The debt has been devalued through inflation. The currency has collapsed relative to gold and real assets. The government imposes some form of new monetary system, maybe backed by gold partially, maybe a digital currency, maybe a complete restructuring. The crisis stabilizes, but at a new lower standard of living for most people. Those who held dollars lost 70% of purchasing power. Those who held gold and real assets preserved wealth. The system resets and the next cycle begins. This is Dalio's timeline, and it's based on studying every previous debt crisis over 500 years. The pattern always plays out over 5 to 7 years from the initial warning signs to the final reset. We got the warning signs in 2022 when inflation spiked. That starts the clock. 5 to 7 years from 2022 is 2027 to 2029, right in line with Dalio's projection. Now, let me show you what he said publicly because Dalio doesn't hide his views. In March 2023, he published an article called The Changing World Order. He wrote, "We are now in a period that is comparable to the 1930s to 1940s period. Big economic problems, big gaps in wealth and values, big geopolitical rivalries. The confluence of these three forces creates the highest risk environment in my lifetime." In July 2024, he did an interview where he said, "I believe we're heading into a period of great disorder. The debt can't be sustained. The political system is breaking. The global order is fragmenting. Those who don't prepare will lose everything. Those who do prepare can preserve wealth and even profit." In September 2024, he updated his positioning and said, "Bridgewater is overweight gold, underweight bonds, neutral stocks, but focused on inflation-resistant companies and overweight emerging markets, particularly China." This is not a man who speaks carelessly. Every word is calculated. Every position is deliberate, and he's telling you exactly what he sees and what he's doing. The question is whether you're listening. Now, let me address the objections because I know what you're thinking. Objection 1. Dalio has been wrong before. Yes, he has. In 2010, he predicted inflation from QE. It didn't happen for a decade. He was early, but eventually he was right. Inflation hit 9% in 2022. Being early is not the same as being wrong. If you positioned for inflation in 2010, you underperformed for 12 years, but you survived when inflation hit. That's the point. Preparation. It means you might be early, but you survive when the crisis arrives. Objection 2. China is uninvestable. Human rights abuses, authoritarian government, regulatory risk. All true. But Dalio isn't making a moral judgment. He's making a financial assessment. When the dollar collapses, capital flows somewhere. And based on debt levels, savings rates, and manufacturing capacity, China is positioned to benefit. You don't have to like it. You just have to understand the cycle. Objection 3. Gold doesn't pay dividends or interest. Correct? Gold is insurance, not an investment. You don't buy gold to get rich. You buy gold to not get poor when currency collapses. Insurance doesn't pay you unless the disaster happens. But when the disaster happens, insurance is the only thing that saves you. That's gold. Now, let me show you exactly what to do because knowing what Dalio is buying is useless unless you act on it. Here's the 3-asset portfolio based on Dalio's positioning. Asset 1, gold. Target allocation 10 to 15% of your portfolio. Not gold stocks. Not gold ETFs unless you can't access physical gold coins or bars stored securely. If you have $100,000 in net worth, put 10 to 15,000 in gold. If you have $1 million, put 100 to 150,000 in gold. This is your insurance policy against currency collapse. Buy it now while it's 2,700 per ounce before it goes to 5,000 or higher. Asset 2, China and emerging market exposure. Target allocation 10 to 20% depending on risk tolerance. You can't easily buy Chinese stocks directly unless you have international brokerage access, but you can buy emerging market ETFs, funds that hold Chinese stocks, Indian stocks, Brazilian stocks, markets that will benefit from the shift away from US dollar dominance. If you have 100,000, put 10 to 20,000 in emerging market funds. Focus on funds with heavy China weighting. This gives you exposure to the rising power as the US declines. Asset 3, inflation-protected assets. Target allocation 15 to 25%. Tips, Treasury inflation-protected securities. Buy them directly through Treasury Direct or by TIPS ETFs. Also consider real estate if you can afford it. Rental properties that generate income. The income adjusts with inflation. The property value adjusts with inflation. You're protected. If you can't afford property rights work, real estate investment trusts that hold income-producing properties and commodity exposure, oil, agriculture, industrial metals through commodity ETFs or commodity-focused stocks. The total of these 3 assets should be 35 to 60% of your portfolio, depending on how aggressive you want to be. Dalio is at about 45% in these 3 categories. The rest is in cash, short-term bonds, and selected stocks that can handle inflation. The remaining 40 to 65% of your portfolio should be defensive cash. Not a lot, just 6 months of expenses. The rest in short-term treasury bills earning 5% while you wait for the crisis. And some high-quality stocks, companies with pricing power, companies that can raise prices with inflation, utilities, consumer staples, energy companies, not tech stocks, not growth stocks with no profits. Quality, profitable, dividend-paying companies that survive recessions. This is the Dalio-inspired allocation. 45% in gold, emerging markets, and inflation-protected assets. 35% in cash and short-term bonds. 20% in quality stocks. This portfolio is built to survive the storm. When the dollar collapses, gold saves you. When the US declines, China exposure saves you. When inflation spikes, tips and real assets save you. When stocks crash, cash allows you to buy. When the reset happens, you're positioned to rebuild wealth. This is not a get-rich portfolio. This is a preserve wealth portfolio because in the coming crisis, preserving wealth is the priority. Getting rich comes later when you deploy your preserved capital into crashed assets. Now, let me show you the signs that Dalio is watching. The indicators that tell him the crisis is accelerating. Indicator 1, the yield curve. When short-term rates are higher than long-term rates, recession follows within 12 to 18 months. The yield curve inverted in 2022, stayed inverted through 2024, uninverted in September 2024. Recession typically begins 6 to 18 months after uninversion. That puts recession starting between March 2025 and March 2026. Indicator 2, credit spreads. The difference between safe bonds and risky bonds. When spreads widen, it means investors are fleeing risk. Credit spreads started widening in late 2023. They've been accelerating through 2024. Historical pattern shows that when spreads widen past certain thresholds, crisis follows within 6 to 12 months. We crossed the threshold in Q3 2024. Crisis expected Q1 to Q3 2025. Indicator 3, geopolitical escalation. Dalio watches US-China tensions, military incidents in the South China Sea, rhetoric from leaders, sanctions, and trade restrictions. Each escalation moves closer to conflict. We've had multiple escalations in 2024. Taiwan tensions, technology restrictions, naval confrontations, each step toward war. Indicator 4, political polarization. Dalio has a tracker for internal conflict risk based on wealth inequality, political divide, social unrest. The U.S. score has been rising steadily now at levels last seen in the 1860s before the Civil War. Not saying civil war is coming, but saying internal stability is at risk. When internal stability breaks, while external conflict rises, while debt explodes, the empire collapses. All 3 are happening. Now, let me give you the specific timeline based on Dalio's indicators and framework. Q4 2024, that's now, is the final setup phase. Markets might make new highs. People think everything is fine, but underneath, credit is tightening. Debt is unsustainable. Tensions are rising. Smart money is positioning. This is your last chance to position before crisis hits. Q1 28-25 January to March the cracks appear. Recession begins. Not official yet. But economic data turns negative. Unemployment starts rising. Corporate earnings disappoint. Stock market volatility increases. Bond yields fluctuate wildly. First signs of crisis. Q2 2025, April to June. The crisis accelerates. Stock market down 10 to 15%. Credit markets show stress. Some corporate bankruptcies. Fed starts talking about cutting rates. Media says worst is over. Dead cat bounce. But Dalio knows this is just the beginning. Q30 2025, July to September, full crisis mode. Stock market down 25% from peak. Bond market collapsing. Fed cuts rates to 0. Launches new QE. Prints 2 to 3 trillion. Inflation starts coming back. Not immediately visible in CPI, but in real prices. Food, energy, rent. This is when you deploy some of your cash into beaten down quality stocks, but keep most dry for later. Q4 2025, October to December, stabilization attempt. Government stimulus, Fed printing, markets bounce, but the underlying problems aren't solved. Debt is still there. Inflation is starting. This is the fake recovery. Don't be fooled. 2026, the inflation phase. The printed money hits the economy. Inflation goes from 3% to 10% to 20%. Gold starts its run to 5,000. Stocks rise in nominal terms, but fall in real terms. Bonds are crushed. Those holding cash are destroyed. Those holding gold and real assets are protected. This is the phase where the reset happens. The currency devalues. The debt is inflated away. 2027, the aftermath. New monetary system, maybe gold backed partially. Maybe digital currency. Standard of living is lower for most people, but the crisis has stabilized. Those who followed Dalio's advice preserved wealth. Those who didn't lost 70% or more. This is the timeline. This is the playbook. And it's based on studying every empire collapse over 500 years. The pattern doesn't change. The timeline doesn't change. The only question is whether you position yourself correctly. Let me end with Dalio's most important insight from his book Principles. He wrote, "The biggest mistakes investors make is fighting the last war. Preparing for the last crisis instead of the next one." After 2008, everyone prepared for a banking crisis. They held cash. They avoided banks. They bought gold. And they were right for a while. But then the Fed printed money, bailed out banks. The crisis they prepared for didn't repeat. Instead, we got an everything bubble. Stocks, bonds, real estate, and crypto all inflated. Those who stayed in cash missed out. Those who bought assets got rich. But now, we're entering a different phase. The everything bubble is about to pop. And this time, the Fed can't save it. Because the problem isn't lack of liquidity. It's too much debt. You can't solve a debt problem by creating more debt. The only solution is to devalue the debt through inflation. Destroy the currency to save the government. And that's what's coming. So, preparing for this crisis means owning assets that survive currency collapse. Gold, real assets, emerging markets that aren't tied to the dollar. This is not preparing for the last war. This is preparing for the next one. Ray Dalio is 75 years old. He's been investing for 50 years. He's seen every crisis since the 1970s. He built the largest hedge fund in the world by understanding cycles. And he's telling you a storm is coming. The biggest storm in 100 years. Three forces converging. Debt crisis, geopolitical conflict, internal division. The same forces that destroyed the Roman Empire, the British Empire, every empire in history. And he's showing you exactly what to do. Buy gold, buy China and emerging markets. Buy inflation-protected assets, reduce dollars, reduce bonds, prepare for currency devaluation. This is not fear-mongering. This is the pattern. And the pattern is undeniable. If you understand what Dalio is saying, if you understand the cycle, you have 3 to 6 months to position. After that, the crisis begins. And by the time it's obvious, it's too late. Gold will already be at 4,000. Emerging markets will have already adjusted. Inflation will already be spiking. The opportunity is now. While everyone thinks everything is fine, while the market is at all-time highs, while the media says the economy is strong, that's when you position. Not when the crisis hits, but before it hits. Because once it starts, you can't get out. You're trapped in devaluing dollars, trapped in collapsing bonds, trapped in nominal stock gains that are real losses. Don't be trapped. Follow Dalio, buy the 3 assets, preserve your wealth, survive the storm. If this opened your eyes to what's really coming, subscribe right now. Over the next 18 months, I'll be tracking Dalio's positioning, his public statements, the indicators he watches, the timeline to crisis. You need to see this in real time because the storm is coming. Ray Dalio has been preparing for 5 years. He's positioned Bridgewater. He's positioned his personal wealth, and he's telling you exactly what to do. The only question is whether you'll listen. The choice is yours. Subscribe now so you don't miss the updates that could protect everything you have built. The storm is coming. The only question is whether you'll be.